You know that sinking feeling. It's 3 a.m. and you're alone in the dark, surrounded by the glow of 5 monitors flashing red. Your last trade just wiped out your gains. Again, the urge to revenge trade surges. Your heart races, palms sweat. This is the trader's nightmare loop: fear, anger, and self-doubt. You whisper to yourself, "I should have known better. Next time will be different. I'll make it back." But deep down you feel trapped. It's not just the market beating you. It feels like you're beating yourself. What if I told you that the real battle isn't against the market, but against what's inside your own mind? In The Disciplined Trader, author Mark Douglas pulls back the curtain on this inner war, the struggle between logic and emotion that no chart or system can overcome. Mark Douglas's classic book, published in 1990, wasn't just another trading manual. It was a wake-up call. He explains that successful trading isn't about being right, but about being mentally aligned with uncertainty. Imagine the market as a force of nature. It is never wrong in what it does. It just is. It doesn't care about your analysis, your gut feeling, or what you want to happen. Your job, Douglas says, is not to argue with reality, but to adapt and align your mindset with whatever the market does. In other words, the market reflects uncertainty, and our minds are usually built to crave certainty. This clash creates internal chaos. Retail traders feel intense emotions: fear when a trade goes against them, greed when a winner runs, frustration after a string of losses. Douglas identifies these as the psychological traps that derail us: fear, denial, revenge, ego, and the illusion of control. For instance, after a loss, you might irrationally tell yourself, "This market is out to get me," which is blaming the market, or "I'll double down and make it back," which is revenge trading. These thoughts are not logical. They are the voice of ego and fear poisoning your reasoning. Douglas calls trading an unstructured environment, meaning there's no external referee or rules beyond price and time. Unlike a structured job where a boss tells you what to do, the market demands self-discipline. Early in the book, Douglas shares his own story of bankruptcy and how he, like many traders, tried to fight the market and fight his emotions, and lost. He learned the hard way that you are the only variable you can control. Every outcome is a reflection of the interplay between random market moves and your chosen responses. At the heart of trading success, Douglas says, is mastering the war between logic and emotion. Logic can define a plan: entry rules, stop-loss levels, position sizes. But emotion, fear when a trade turns red, greed in a winning streak, stubborn pride after being wrong, can hijack that logic at any moment. As Trader Lion puts it, when money's on the line, emotion hijacks logic. This is why Douglas insists, make all your decisions before you're in the heat of the trade. That means setting your strategy and rules in advance, writing them down even, so when your heart pounds, you have a pre-committed plan to follow. Think of it like sports. An athlete practices shooting free throws thousands of times. In the actual game, even if the crowd is roaring and their heart is thumping, muscle memory and predefined technique, logic, takes over. In trading, your predefined rules are that muscle memory. Without it, panic or pride will dictate your actions. Visualize a boxer in the ring. He doesn't start thinking jab, cross, jab in the middle of a match. He already drilled it in training. Likewise, define your rules before the trade, not during. Douglas also highlights a classic cognitive bias, the illusion of control. Traders often behave as if they can master the market's randomness. It's like a poker player thinking they can control how the cards fall. But each trade is its own random deal. As one trader warned, a person may hold a belief or expectation for a market or a trade, but it has nothing to do with the future or the outcome of the trade. In other words, trusting your intuition or insisting this stock should go up despite evidence is a path to pain. Instead, Douglas preaches a probabilistic mindset. He expands on this later in Trading in the Zone. He teaches that every trade has an uncertain outcome, and that a series of small edge plays, like a gambler knowing the odds, beats trying to predict each individual result. Picture it, even if you lose a trade, that is part of the game, not a personal failure. Because, as Douglas says, a string of random outcomes can all be winners over time if your edge and discipline hold. One of the biggest breakthroughs in the disciplined trader is shifting from an outcome-focused mindset to a process-focused mindset. Most traders obsess over results. How much did I make today? Or that trade should have gone my way. Douglas argues that this is backwards. You can't control outcomes, only processes. He teaches, results will reflect your level of mental discipline and development. Imagine an entrepreneur who launches startups. They don't gauge success by one pitch or one product launch. They focus on following a process, research, pivot, adapt. Similarly, in trading, you set up a method and follow it consistently. As one trader blog put it, the only way to stay in the game and be profitable overall is to cut losses and take the next trade. Losing a battle isn't losing the war. You learn, adjust, and keep going. Douglas says a truly disciplined trader accepts losses without self-flagellation. Each loss becomes data, not drama. Douglas also explains that expectations are often the root of pain. If you enter a trade expecting big wins, disappointment is guaranteed. He warns, nothing else has the potential to create more unhappiness and emotional misery than an unfulfilled expectation. Traders fret when reality doesn't match their daydreams. Instead, Douglas suggests embracing each outcome as a learning opportunity. Picture a video game player, a level fails, but they restart, learn enemy patterns, and try again. The player cares more about skill growth than any one level score. In trading, shift your focus the same way. Trust the process, and view each moment as feedback on your current skill, good or bad. Battling fear and greed. Fear and greed are the twin monsters on every trader's shoulder. Fear whispers stay out when you could profit, or it screams double up after a loss. Greed pushes you to ignore exits. Douglas demonstrates that these emotions are fueled by our beliefs about money and success. For example, if you believe a good trader should never lose, you'll panic at any red candle, since you think a loss means you're bad. But that belief is simply untrue. In fact, Mark Douglas later summarized trading truths. You don't need to know what is going to happen next in order to make money. You only need a method. Revenge trading is a classic example of ego firing. You lose, then let anger run your next trade, turning a small loss into a bigger one. Douglas breaks down this ego-driven cycle. He says we must reframe our identity from fighter to observer. You're not battling the market, you're observing it. As one trader put it, fearful trading usually isn't profitable due to the behavior of the trader, while the market has nothing to do with it. The trader creates fear that is only in the trader's mind. The enemy was always your own fear and that belief about it. Think of poker. A pro doesn't chase losses with a wilder bet when frustrated. They stick to their bankroll rules and game. They take bad beats, go away for a breather, then come back disciplined. In sports, an athlete hitting rock bottom by missing shots doesn't hurl the basketball at the coach. They refocus, stick to training. Trading demands the same mental training. Emotions must be managed, not indulged. Mark Douglas doesn't leave you without tools. While most traders learn technical patterns, the disciplined trader lays out a system for mental rewiring. Here are some key lessons to implement, inspired by Douglas. Set rules and trust them. Before you click buy, define your entry, exit, and stop loss. Douglas stresses, to excel in any activity, we need to learn specialized skills. In trading, that means the skill of pre-commitment. Write down your plan, even when practicing in a simulator. Then, stick to it, even when your heart says otherwise. Use a trading journal. Record not just the trade results, but your thought process and emotions. Over time, you'll spot destructive patterns, like consistently ditching your plan when fearful. As one expert notes, my worst trades, and there have been a few of them, have all been when my best laid plans are thrown out of the window when I lose discipline. Catch that before it happens. Accept uncertainty. Every trade has an unknown outcome. Douglas writes, in any particular trade, you never really know how far prices will travel from any given point. Don't act as if you have godlike knowledge. Instead, manage risk so any single loss doesn't hurt you. For example, use stops and only risk 1 to 2% of your capital per trade. This is like a poker player always knowing their all-in threshold. You can't lose the game if your losses are controlled. Think of probabilities, not guarantees. Douglas's mantra: there is a random distribution between wins and losses for any given set of variables. Remind yourself on every trade that you might win or lose. Each outcome is just one roll of the dice in a game you play many times. Focus on making each dice roll as sound as possible, not on predicting which side it will land on. Learn from losses, don't fear them. Reframe a loss as a data point. If a trade fails, ask, was my plan solid? Did I follow it? Rather than, why did this happen to me? The book even advises that stepping through your fears breaks some cycle of frustration and dissatisfaction, builds wisdom. With each fear confronted, you strengthen discipline. Call to action. Trading isn't just charts and candlesticks. It's a mirror reflecting what's in your mind. As Mark Douglas teaches, true winning in markets means becoming the master of your own psychology. Now it's your turn. Tonight, review that trading journal or recap that last losing day. Can you spot moments where fear or ego crept in? Write them down. Ask yourself, what beliefs was I holding? What would I have done if I treated the market as just happening instead of something against me? Commit today to one discipline change. Maybe it's setting a strict stop loss or taking a 5-minute break when feeling emotional. Remember the core truth Douglas lays out. The market is never against you. It simply is. You define your response. Use that power. Practice process-focused trading. Treat each trade as a step in learning, not a test of your worth. You've faced the storm of emotions in the past. Now imagine facing the market with clarity instead. It starts with your mind. Make that mental leap today. Embrace discipline over desire, process over outcome. The next time you sit at your trading desk, remember, you can master yourself, and through that, master the market. Go ahead. Close your eyes, take a breath, and take control.